welcome. We are ready to go. My name is Mike Hamilton from Trade Easy Way. So just about to dig straight into the heart of these markets and plot my way through the coming week and beyond. Okay, start off talking about some day trading, because despite the sloppy start to the markets, it was actually quite a good day. What I really liked was this oil trade here, and I actually forgot to post it because I was just busy getting on with some work, but bought this support here, and it's done about 350 pips, I think. 416 into 750, it's done. So nice little move. We were just too extended up here, with a bit of a head and shoulders up here. On this is a 2-hour chart, so we gapped down here and wound their way down to this area here. It's a bit of a boomerang trade, so it could potentially still creep up here. So that was the oil. Gold is still getting cranked up a bit. Similar story. Nice move down at these support areas. I'm still in this one. I'm taking profits off of oil. I'm still in this one. We'll get on to the main scan session in a minute. But trendline support, too high up here, drifts back, volumes coming in, pull back to a key area. So the lows down here at 1920. I took 2 bites out of it. I took a bite up, took it off the floor into that resistance, and then bought back here. And so on the second entry, I posted that and put that out. Weirdly enough, I've not traded the indices today. The Dow has picked up. Okay. Yeah, it's obviously a resistance point up here. Dow was struggling, volume was rubbish. We ground back down again. I'm just beginning to pick up some, but not very much in it. Some mixed signals, so not great. Right, let's go to the daily. Enough of day trading. Let's have a look at the daily charts and pick our way through here. So you can see why I'm not enamored by the indices, because they're struggling at this resistance. They're in this apex. So if this is a bullish consolidation, we need a further dip. Also, we were just slopping around last week, and again we're still slopping around in the same range. I've not double checked what the data is, if anything, this week. I don't think it's got 1st of April Friday, haven't we? I presume we got monthly jobs on Friday. Let's have a look. Yeah, welcome everybody. If you're new to the event, then I'm just going to go through the main indices and the main markets, and then talk about stocks. Yeah, I've got US monthly jobs on Friday. We are looking for a drop in the unemployment rate from 3.8 to 3.7. Don't think there's anything else significant this week, is there? CAD GDP, UK final GDP, and I think that's it. Yeah, not a lot. So it's just a focus on. Yeah, we'll talk about Forex as well, Omar. Let's just go through the indices first. So Dow slopping around, this nice big move up here. So it's a 1, 2, 3 wave move into this resistance, or into this drop zone. I think we're going to need a run up to this, so I'd expect to see it come back into this sling. So potentially hit last week's lows. So we've come up on low volume. The initial move here was good on reasonable volume. And we've slopped around a lower volume here, so not surprised to see this drifting lower. By all means, punch any questions in, and I'll come to that. The Nasdaq is brighter. That's made a new week. Well, just started the week, and it's broken last week's high, so that's a good start to the week. The volumes are better. Traded Nasdaq for a good 2-3 days last week, and found it cleaner at times. Let's look at the DAX. Same story. Very decent leg up, drifting at this resistance, not going anywhere at the moment on that one. FTSE, surprise, surprise, trapped in that range, volume falling off. We need a deeper pullback. Even in a bullish consolidation, we still need this to pull back to 7,400 at least. Okay, let's look at the Asian markets. China is pulling right back. So this huge bar on the 16th of March, and all we're doing is pulling back into it. That's fine. That I would still classify this as a bullish move, as long as we can hold this and start to close higher. And the Nikkei. I bought into Japanese small companies on these lows, so very happy to see the Nikkei. You know, I think I'm very, very interested in Japan. I think Japan are outside of the rate rise cycle, and yes, I'll send. Can somebody grab the Telegram channel link? If you're not able to, I'll put it in the room shortly. I'll answer that question in a minute, Pinkesh. Yeah, so I'm very interested in Nikkei, hence the reason why I bought into a Bailey Gifford Japanese small company fund. The forgotten the other one. There's a couple of funds that Shin Nippon. Also, I'll come to those in a minute. Do I think? Let's have a look at the Nasdaq again. I think unless we hold up here on good volume, I think the Nasdaq needs a pullback as well. It may not get it. I mean, if we kick off the week like this, maybe the Nasdaq won't pull back like the other charts. The Nasdaq stocks were this is a deeper pullback than the other indices have done anyway. This overshot the support that the Dow and the S&Ps found, so this is playing catch up. I think we're expecting the common mistake that some traders make is they assume that if you got rate rises, the markets will drop. Not so. We are in my book, we are in a, I'll come to the, let's look at the Dow. We are in a expansion phase, which normally experiences rate rises. So we had the, let me get the bigger, let's come across here. As far as I'm concerned, we have had a COVID recession, fastest shortest recession on the books, recession, recovery, expansion, rate rises during expansion period. So these dips are still potentially bought. And I would look for, this is a daily Dow, I would look for the Dow to at least get back up to 37,000, at which point either we're going to dither and go further, or we're going to struggle and fall over. I'm going to be wrong if we start closing underneath this apex I've talked about. So most people think we're going to end up with, in the US, most people think we're going to end up with another 1% on top of current rates in the US. Anybody who's got a mortgage and not fixed their mortgage, you are potentially already too late. But there are still some better bargains out there. I was looking, those of you who know me well know I nagged my son to get a 10-year fixed. He's got a 10-year fixed at 2.5. He's had that for nearly 3 years now. So he is beginning to profit from that, and he will continue to profit for the rest of that mortgage. Current rates are already creeping up. You can just about get a 5-year for 2.3, but you won't get a 10-year for 2.5. I don't believe you'll get a 10-year for 2.5 now. 10 years are probably closer to 3.5, but right, let's look at dollar index. So we've got, if we get a healthy jobs number, so we get the dollar index dominated by the euro and the pound, mainly euro. So if we stay above this apex, this dollar could get up to the 101.80 mark. So we're coming up here on volume. So the strength continuation in the dollar. Quick look at the pound before we move on to stocks. So dollar is killing the pound at the moment. This is coming down on volume. So if this really makes a run, then we could see 128 if we break down this area here. So if we stay on, this is 2021 lows. So if we stay under here, any pullbacks to 130, 130, 132 are shortable with a view to that coming down. Elliott wave, we've got a 1, 2, 3, 4. So we're currently in wave 5. You might get a wave 3 correction. And that could be more. I've been very conservative with that 3-wave correction. So you may get any pullbacks into that resistance area, particularly if it's a C-wave correction, could be the start of another 5-wave. This is a very bearish scenario for the pound. Again, quite conservative, but that's where I think you might be. So any highs, any rallies in the pound are potentially shortable. Pound CAD still looks lower on volume. Look at the volume coming in on this. So we sold at the 50%. We've broken down under that extension, and we now look as if we could come and see 162. I don't trade forex anymore because I think it's too boring, but for those of you who do, that is interesting. Oh, the oil's come off a lot. Okay. Gold is still ticking up. Right, let's look at the volatility index. Is subdued at this stage, but any push above 25 could see the volatility come back. Emerging markets, yeah, see, we've come out of this funnel on emerging markets, but I think emerging markets are potential, like the Japan market. I think emerging markets are potentially good. They are vulnerable to a strong dollar, but that looks as if that's quite a robust chart. Right, quick look at commodities, and then we will look at stocks. Any more? Let's have a look at Bitcoin. Don't look at Bitcoin enough. I thought Bitcoin was going to sink. Russia are talking about trading oil in Bitcoin. So Ukraine has potentially skewed my scenario planning for the Bitcoin. So I was thinking Bitcoin would be finding itself, there's a gap down here. It nearly closed it in January. You could argue that it has actually just about closed that gap. Okay, so my scenario plan has, you could argue it has, or I could argue it has worked out. I thought we'd have a deeper retracement, but so this gap down here on the 24th of July 2021 is just about now eradicated, technically, just about. So Bitcoin at the moment is still very bullish. So any breakdown into this 44,000 mark could see that recover to 53 and beyond. Any market that can sit above a pattern like that, pullbacks are viable. So we're coming up on volume. So if that impulse wave is over and done with, then this pullback, if that structure holds down here at 44, then we could go and find 53, 54 plus on the Bitcoin. Right, commodities. Commodities are fascinating. Bear with me one moment. Right, this is the link for the Telegram room. Anybody who's not in the Telegram room, join. Right, and wheat. I'm very interested in wheat. This is a massive bull flag. There's a pattern that we broke out that potentially the Bitcoin is experiencing. So if we hold this $10, I will be getting back into wheat with the potential for that to get back up to 13 and beyond. I think on the weekly chart on the wheat, now you can trade this on ETF, you can trade it in futures, ETF, CFDs, all sorts. We are in a commodity super cycle. Yeah, so $10 is an extension level. So you never know, we might boomerang back down to this breakout area. So we might potentially see $9, but I think that is doable. Beans have been running really well for quite a while. So these beans have gone. These need a deeper pullback. So the beans are ahead of the wheat. So this is what down here in November is where I would expect wheat to go in the coming few days and maybe a week or so. Corn's too high, so the wheat is definitely the one to watch. Cotton gone, orange juice on the way. We talked about orange juice back down here at 120, 125. Rough rice, that's struggling. So rough rice is interesting. Coffee. This is copper, high-grade copper, sitting up at the highs. Lumber. Now, yeah, I think the housing market's going to struggle, so I'm not surprised to see lumber coming off. So it's the foods that really get me interested. I think the wheat is by far the most interesting at the moment. Let's look at natural gas. Not even looked at gold yet, have we? I think gas will top out now. I'd be very, very surprised if gas keeps going here. I could be wrong. Could be wrong on any of this. All I'm doing is scenario planning with experienced judgment calls. I'd be, like I say, look at the volume. The volume's coming off from the gas. The reason why I think gas is going to come off is because cyclically it falls back. Well, it's normally already falling back this time of year, but obviously Ukraine has skewed it. Right, let's look at nickel, because nickel went on a fantastic run. Yeah, look at that. What a chart. Shows you what a crazy life we're all leading at the moment. Nickel was right up there at 100, and now we're right down here. Wow, what has happened with that? That's a weekly chart, isn't it? Must be the effect of the contract changeover, I'm guessing. Right, I didn't realize nickel had done that. Right, let's look at gold and silver, and then we'll move on. Gold, obviously I've just been buying back into gold. Why? Because I think this pullback last week on the no, that's 2.5 weeks ago. Let's go back to the daily. I'm confusing myself. Yeah, I think this is a bullish consolidation here. Bullish consolidations are generally over on once you see a pullback. So all we're doing is, we had a fairly good week last week. We're pulling back into last week's range. So if we hold this and close above 1460, we could go back to 2000 and see these extension levels up here at 2040 and then 2145. Silver, I'm liking silver a lot. This is a good opportunity in silver, I think. I think silver will maybe pull back a little bit further. I think these pullbacks are well worth buying. If you see 24.70 in silver, I think that's a buy. Ultimately, I'd expect that to go back to these highs. And if we run, I think later in the year, we could see 32.50, 35 on silver. That is all going to be cancelled out if we cannot get, if the pullback's not bought and we can't get above 25.70. This platform is pro real time. Contact me for more details about specifics, and I'll go into it rather than go into that now. Right, so that's gold, silver, softs, some metals. Let's now look at stocks. Now Rolls had this incredible move into 111. Most of that was done, I think, the last 30 minutes of trading. I think it was just a rumor. I think it was a takeover, or yeah, I think it was a takeover rumor. I'm not sure if it's true or not. But anyway, the market reacted to it, bumped right into resistance level 110, 111. We're pulling back. So a lot of profit taking on that squirt higher. If we can hold this 98 mark, 9800, 98 pound mark, then as you can see from this three-wave pattern, I think we can go and see 125 again. So I do think Rolls is viable down here. You may be able to get a deeper pullback, but at the moment that is going to stay there. I'll just rip through the stuff I've got. IQE, been in this a long time. We had a buy signal, I say a long time, we had a buy signal back in January, not that long. So I'm looking for 54, 55 in IQ. We're going to struggle at 50 with a huge drop up there at 50. So it depends on your timescales and your trade plan. 45 is going to be a problem for it. If we get to 50, you probably see a lot of profit taking. So 55, you're going to have to wait, potentially wait and be very patient to get 55. If you are swing trading it, then you should be thinking about 45 or maybe 50p coming out if you're swing trading it. If you're investing it for the long term, sit tight, don't watch it too much, and it should grind higher. If you're not in it, there are still, I think the volumes are slowly increasing. It's a slow one, so I wouldn't buy it in CFDs. Why? Because you pay so much in overnight charges on CFDs, you're going to need, unless this really legs up, you may not get your money back. CFDs are a little bit expensive if you hold them for too long. BT, yeah, we saw this blast down to 154 on the 7th of March, and we've not really pulled back ever since. So I got out at £2, missed this pullback, so I'm not in this at the moment. Really, really wanting this to have a bad hair day and drop back further. Vodafone, I got in, took 25% profit and backed out. I'm liking the volume on this. That's a very hefty volume on the 16th. Any pullbacks to 118 are buyable. Will we see that? I don't know. 115 will be even better. The way it's going, I don't think we'll see that. But if you do see it, I will be in. So it's possible. It's possible it might have a bad hair day and pull up. ASOS is rubbish. It's a dog at the moment. It has put in a buy signal on volume today, but the jury is well and truly out. If you're interested in this, I would go in small scale. I would not put my house, certainly would not put my house on that. I'm liking the healthcare sector. I've been in Pfizer on this pullback and looking for Pfizer to go back to 60 plus and ultimately 68, 69 plus. It is stalling, so you might well see it pull back to 50 again. I wouldn't be at all surprised to see that go to 50. Otherwise, if we close above 55 here, then you won't get a pullback, or you may not get a pullback, and then we'll start to climb up again. But this something like Pfizer has been a very good trade for me. I've been buying these pullbacks last year, coming out on extensions, and then buying pullbacks again. So I've been swing trading it. I've not been investing in it. I've been swing trading it and having a lot of fun with it, basically. You know, it's a good steady eddy and a good one to get you in on it. Right, let's look at specific sectors now. Finance sector, Barclays. Pulling back on volume. That's a buy at 150, 155, I think. NatWest, we'll look at NatWest in a minute. Lloyd's. I don't know why Barclays is struggling. I have to do some. So Lloyd's has come right out of that 39p. If we see 44p, that's a buy. The way in which this is behaving, it looks to me as if it needs a pullback to get it going. Where's Yonja today? A bit lower numbers, aren't we? Maybe people are not getting used to the new time. First time we run it on this period. So HSBC sitting up nicely. Let's look at NatWest. Yeah, so we've seen a lot of, they've done a big buyback, haven't they, from UK government. Looks all right, looks good. I prefer Lloyd's and Barclays. Right, Legal and General. Very similar patterns. It's been on a run and pulling back. Right, let's look at basic materials. Gem Diamonds sitting up. That's a pullback into 55. Elementis is big. I'm liking Elementis. I need to add to my Elementis. The volumes, we had a good run up here from the 8th. We are holding up here on volume, so wave, we may be about to enter wave 3. So I like Elementis. TPI cap needs a pullback. That's been on a nice run. I'd love to see at least 135. Glencore, that needs a pullback to 450, 460. Man Group, been on a fantastic, nice little run on volume. No, these are all, this is a commodity trader. TPI cap and Man Group, this one EMG, are all commodities. So I'm just interested in anything commodity related. This one I missed this year. This is iGas, a cheapie. So I'm going to be looking out for a pullback on iGas. Right. Miners. Pan-African pulling back. So this area up here was a struggle for it. I think this is a healthy pullback. It might go, I would have thought that go deeper into 20 before going to 25, if I'm right. No guarantees, of course. I think POG, I've not even got POG on my list. Let me just pull POG up. It's still down on its knees, isn't it? Ah, okay. Look at that. That's, in theory, that's a buy signal. New low, close above, on volume, but not for me. I'm not touching it. Griffin sitting up. Hochschild looking all right. US silver minus, pulling back into support. That's good. Might get a deeper pullback on that. I think that's definitely viable because if we subsequently break above 490, I think that could run. HL, Rio, okay. Yeah, sitting up really nicely. Volumes are tailing off. This is a big problem for this one. I would have thought this might need a deeper pullback. You're looking for 60. Well, you know what? I'm not in there. I swing traded this on a few of these swings. In a stock like this, I wouldn't hang around for 60. If I saw 58, 59, I'd be out. It's yeah, my strategy is to get in front of these big resistance areas. It looks good. I just think if it stalls here, then we could go right back to 55, 53 if it stalls. But you know, if it closes above 59, 60, it could find itself up at 64, 65 quite quick. If you're going to sit in it, I would hold out for 64.50 personally. If I was going to swing trade it, I'd be out by now. If I was investing, I'd be looking for 64, 65. What else have I got? I meant to put this one on my list. For some reason I haven't. Because this has been a great performer, this one. Yeah, it's still perking up on volume. Still coming up on volume. Bizarre. Right, that's mine. So we've done miners, financial, energy, Tullow, pulling back, looks all right. Volume's not great. Might see 49.50 again. 88E. Not doing a lot. What else have I got on the energy? I suppose I could look at CLA and Drax and all that bunch. So that's hit a resistance level and stalled. So there's a lot of stalling going on at the moment. Not looked at poly. Let's look at poly. So let's go back to metals a second. It's beginning to perk up. Again, I'm not touching anything with Russian exposure for obvious reasons. Right. Anything else you want me to look at? MGAN. Stuck in that range. SCX. Big US copper miner. Bristol Myers. Let's look at some US stuff. Bristol Myers been on a nice run. Medtronic. I'm liking this. I like the volume pickup here on Medtronic. I like that one. Right. Okay. Let's leave it there. No requests coming in. So just a quick look scan. ICAP I've done. Uranium, okay. Boo. Physical, yeah. IAG, struggling. Royal Mail Group, struggling. Scion, Persimmon, sorry. Yeah, see, look, the Persimmon, a lovely big dividend payer, is coming down on volume. So some definite, I think the Facebook's pathetic, really. TPI cap, TLPR, isn't it? I think that could see 135 again. It's had a nice little run. Let's look at uranium. What's the ticker for uranium? Let me try and find it. Sprott, right. That's what you wanted, wasn't it? Nice chart. It's running out of steam though. Unless we close above 1850. We close above 1850, then we could be going to 2050. But it's running out of momentum here, so I think this needs a pullback to 1676. I need to add this to my watch list because I like to look at that. Brilliant. Thanks for your time. I'll see you on the quick Wednesday checkup, and then otherwise back to next Monday. Thanks, guys. Bye.